China has announced it's reopening its borders next month as it eases COVID restrictions. But the move has sparked inflation concerns worldwide. Joining us live now is AMP Capital Chief Economist Shane Oliver. Shane, great to be with you. What impact will China's border reopening and relaxing of restrictions have on Australia's economy?
Look, I think ultimately it will be positive because it will lead to a resurgence in Chinese economic growth, which means more demand for our commodities. But at the moment, in the short term, markets are worried about two things. They're worried about the inflationary consequences of reopening, but also they're worried that the surge in the number of cases in China in the short term could flow through to other countries around the world. And you've seen renewed testing in Italy and also in the US announced overnight for flights coming out of China. So that's sort of what's impacting markets in the short term, those inflation and COVID concerns. Ultimately, though, I don't think it's going to have a major inflationary consequence because the rest of the world is slowing down, potentially going into recession. So I think those concerns are overblown. But for Australia, it's probably ultimately good news.
So you think it's good news? At the moment, it's having a negative impact on the stock market, but do you think that will last?
I don't think it will. At the moment, the markets are just very twitchy. Concerns about central banks, concerns about recession, concerns about inflation lasting longer. Very negative mindset. This time of year, you normally see the so-called Santa rally. But of course, if you go back through history, about 1/3 of the time it doesn't come through. And of course, this just happens to be one of those occasions where the negatives, the worries about recession and inflation and interest rates, are dominating the positive seasonal cheer, if you want to put it that way. But ultimately, I think even though we're probably going to have a rough start to the year, and we could have a potential for the market to retest the lows of 2022 early in the year, possibly around February or March, I think ultimately the year will turn out to be a far more favourable one as inflation heads down, central banks take their foot off the brake, ultimately moving towards somewhat easier monetary policy, and as the Chinese economy rebounds, supporting global growth to some degree. And that should help our share market rise. But right here, right now, it's still fairly negative and still fairly rough.
And you expect that turnaround to happen sooner rather than later?
I think the turnaround will probably come around February, March period. So we're probably going to have some more uncertainty into that time, worries about recession globally, worries about a slowdown in the Aussie economy, further rate hikes from some central banks, and also that surge in cases in China will have people nervous over the next couple of months. But I think by February, possibly March could be, we'll see markets make a low and then see a better run into the end of the year.
Okay, and you don't expect inflation to soar much higher next year?
Look, I think we're going to see some bad
down?
inflation. I think in the short term, we will get some more bad news. In Australia, our inflation rate will probably rise to around 8% through the December quarter. And that's on the back of the rise in energy prices, electricity prices, and so on. So some more bad news to come there. But the US is a good lead here, and we have seen US inflation rate peak around the middle of the year at 9.1%. It's currently 7.1%, and that's heading down. So the US is leading Australia by about 6 months on this. And I think as we go through 2023, we will see inflation in Australia fall, even though in the next month or so, we're still going to get some negative news or bad news regarding the end of 2022 and inflation still going higher for that period.
Well, plenty of silver linings there. Shane Oliver, thanks so much for your time.
My pleasure. Thank you.